Let's learn about the revaluation adjustment. This is one of the adjustments where most of the A-level students are finding difficult. So this is not going to be a comprehensive explanation. I'll give you a quick explanation for you to get the idea about the revaluation adjustment. Okay. In your A-level syllabus, when it's come to the revaluation, you will get tested only these 6 scenarios. So what are these 6 scenarios? First scenario is where they will say prior you have not done any revaluations of the given asset. This is the first time you are doing. So as a result of the revaluation, sometimes you can have a gain, that means surplus. Sometimes you can have a loss, deficit. So what is this gain, loss, deficit, surplus, everything? Moving forward, when we are doing the calculations, I will explain it to you. So that is one set. And there is another set. What is this? They will say, you are not doing the revaluation for the first time. Prior years, someone else's have done the revaluation. We'll assume you have joined the company now only. We'll assume like that. Okay. Prior years, there was a revaluation. Now you are going to do the subsequent revaluation. That means not the first one, afterwards one. So under that, you can have 4 different scenarios. Understand prior year gain, and when you are doing, for you also gain, subsequent gain. Prior year loss or prior revaluation loss, when you are doing, for you also loss. Third situation, prior year's gain, when you are doing, it's a loss. Next situation, prior year losses, when you are doing, there is a gain. So how to do this adjustment, especially when it's come to the company accounts unit? Let's learn using 6 different questions. Okay. So before moving to the question, one of the very important things I want to tell you, whatever the revaluation adjustment that you do, always ensure before you do the revaluation, depreciation is done. Depreciation is done up to the revaluation date. Depreciation is done up to the revaluation date. Reason, when it's come to the revaluation, except for land doesn't have a depreciation. When it's come to the revaluation, always we'll be comparing the carrying value with the revalued amount. Carrying value with the revalued amount, not the cost. So for the land, you can have, again, I'm telling the same thing. Okay, now don't keep that point as a point and don't take it as a wrong thing. So for other assets, the assets which is having a depreciation, okay. So what you have to do is ensure you have done the depreciation up to the revaluation date and you have calculated the carrying value as at revaluation date. Okay. Ensure this is done. So this is a part of depreciation. This is a part of depreciation. This is not a part of the revaluation. This is a part of depreciation. You ensure your depreciation is done up to the revaluation date and you have calculated the carrying value of that particular asset when you are doing the revaluation. Ensure to do that first. Okay. So after you calculate the carrying value as at revaluation date, okay, how to do the revaluation is what we are going to see. So scenario number 1, prior revaluations were not there. You are the person who is doing the revaluation for the first time. You see here, the value of the asset is 500. It has gone up to 600. It has gone up. It has increased. So that means there is a gain. Then obviously asset value should increase. So increase the value of the asset. Increase the relevant asset. So that's the adjustment. So debit the relevant asset. That's what you should do. And it is a revaluation gain. Revaluation gains should go inside the revaluation reserve, but you can't directly go and put it to the revaluation reserve. So you think like Revaluation reserve is a big person, big shot. Always you have to go through his assistant. Think like that, okay? So you have to give that amount to OCI. OCI will go and give it to the revaluation reserve, okay? So what will happen is here, your equity is increasing, credit entry. So eventually it should go to the revaluation reserve only, but you can't directly go to the revaluation reserve. So you have to go through OCI only. So Mr. OCI will go and give to the revaluation reserve. So you will debit the relevant asset account, credit the OCI. OCI will go and give it to the Mr. Revaluation reserve. Okay, that's the process. So very simple. This is increase. So pause the video and you see whether you got it properly. Increase in the value of the asset. So value of the asset increasing, from other side, equity increasing. So how to increase the equity? You have to go and put it to the OCI. Okay. So in your statement of profit or loss and other comprehensive income, you have the OCI portion. Under the OCI portion only, you have to put this extra 100. So relevant asset is increasing, debit 100. OCI credit 100. That's how you have to record. Okay. Now let's move to the next one. Now here you see value of the asset is 500. It has gone down to 450. So value of the asset has decreased this time. Value of the asset has decreased. So credit the relevant asset. So you see, very simple, whether the asset has increased or whether the asset has decreased. So asset has increased means you should debit it. Asset decreased means you should credit it. So credit the relevant asset by 50 because it has been decreased. Now this time it is not a gain, it's a loss. And you are doing it for the first time. So whatever the revaluation losses will be treated as an expense. It will be treated as an expense. So it will go under the other expenses. Debit the revaluation loss. It's an expense. It will go under the other expense in the company accounts question. 50. So that's how you should record it. So under the PPE note, you have to go and record the reduction in the reduction of the value of the asset for the revaluation as a minus, and go and put this 50 for the other expenses. So this is what you have to do if you are doing the revaluation for the first time. Now let's get into the next question. In this question, what they're telling is, so this is also very simple one. So before getting into the question 3, 4, 5, 6, I'll tell you one thing. When you are doing the subsequent revaluation, always you have to see what has happened in the prior revaluations. You have to see what has happened in the prior revaluations. You have to see. You'll understand it when it's come to the fifth one and the sixth one, because fifth one and the sixth one is the area where most of the students are going wrong. Okay. So let's come to this now. Question number 3. Question number 3, what they are telling is prior revaluation gain is there. That means already inside the revaluation reserve, 100 is there. Now your financial year carrying value 600. Again, when you are doing the revaluation, so prior years they have done the revaluation, it has already made a gain. Now you are also doing the revaluation, 600 has gone up to 750. Same as the first one. No difference. It has gone up. Increase the relevant asset. Now you think, now you don't think, you tell to the screen, okay, not a problem. I know you are watching a video. Tell to the screen, what should be the credit entry? Your equity is increasing. Okay. Your equity is increasing. Why equity is increasing, people? Because it's going to the revaluation reserve. Okay. It's going to the revaluation reserve. So credit entry will go to the OCI, other comprehensive income. Eventually, other comprehensive income portion, you will go and put it inside the revaluation reserve. So here revaluation reserve is increasing by how much? 50. Okay. So first you have to put it to the OCI. Yeah. You put it to the OCI. That 50 later, end of the year, Mr. OCI will go and give it to the Mr. Revaluation Reserve. Okay. You can't go and meet the Mr. Revaluation Reserve. You can't meet him. He's a big person. So you can always deal with Mr. OCI. You go and give it to the Mr. OCI. He will go and give it to the Mr. Revaluation Reserve. Okay. So same as the question number 1. Same as the question number 1. Next one. So here prior you had a loss. That means previous year, previous accountant. You think you joined the company this year only? Previous accountant, that bugger has already recorded a expense. Okay. He has already recorded 50. Now your turn. He retired, previous accountant retired. Now you are doing the revaluation. When you are doing the revaluation also, again there is a reduction of the asset. So credit the relevant asset. Credit the relevant asset. It has decreased by 100. It has decreased by 100. Same as the question number 2. If it is decrease of asset, it will go where? You have to record it to the other expenses. So it's an expense. It's an expense. Debit the revaluation loss. It is going under the other expenses 100. It is going under the other expenses 100. So if you ask me this one, if you ask me whether this one is directly equity, no, it's not directly equity. Actually, it's increase in the income. OCI is a part of income statement. OCI is a part of income statement. It's increase in the income. So Mr. OCI will go and give it to the revaluation reserve. So after that only equity will increase. Okay. He also say, in this question also say, actually first it is increase in the income because it's a part of the income statement. After that, when OCI go and give it to the Mr. Revaluation Reserve, equity will increase. Okay. That's how it will happen. And the next one. Okay. Before getting into the question number 5 and 6, let's quickly run through the first 4 questions that we did. First one, revaluation gain. Increase the asset, record the OCI. OCI will go and give it to the Mr. Revaluation end of the year. Okay. Second one, decrease in the value of the asset, but always I told you, you have to compare the carrying value with the revalued amount. Ensure to calculate the carrying value first. Decrease in the value of the asset. So decrease the value of the asset, credit, and it's an expense, other expense. Go and record the other expense. Okay. That is the first time revaluation. Now you are doing the subsequent revaluation. You are seeing what has happened in the prior time, previous time. So previous time gain, for you also gain, no problem. Then you just record the gain. Okay. Previous time loss, for you also loss. No problem, just record the loss. Okay. Question number 5 and 6 are super important. Listen carefully. Prior there is a gain. So already with Mr. Revaluation Reserve, he is keeping a value of 100. Previous year accountant has done it. He has given 100 to Mr. Revaluation Reserve. Okay. Now you are doing. When you are doing what has happened, value of the asset has decreased. So credit the relevant asset by 150. It has decreased. So when the value of the asset decreases, ideally it should go to the other expense. No? Now focus. Huh? Now focus. Focus is very important. When the value of the asset decreases, there is a revaluation loss. It's going as a other expense. But here you can't put the entire 150 to the other expense, because I told you when I was starting the explanation, when you are doing the subsequent revaluation, always you have to see what has happened for the prior revaluations. Now when you are checking this, prior revaluation, in this one, it's clearly showing already it is having a gain. Already it is having a gain. Then what you should do? You have to reduce the gain. How much you can reduce? You can't reduce 150. No, you have only 100. Then go and reduce that 100. So debit the, if you write revaluation reserve, reduction of the equity, no. You have to reduce the equity, no. Okay. You can't go and put it to the revaluation reserve directly because I told you, you are not allowed to meet Mr. Revaluation Reserve. He's a big person. Okay. You have to go and give it to the Mr. OCI. Debit it to the OCI, 100. 100. The remaining 50. Remaining 50 is the revaluation loss, which is going as other expenses. Okay. So if I show you this one in your asset, in your note, under the asset, reduction should happen 150. Okay. In your PP note, you have the PP note. And in your statement of total comprehensive income statement, statement of profit or loss and other comprehensive income, both are same. Under the OCI, you have to record a minus 100. So Mr. OCI will go and give it to the Mr. Revaluation Reserve like this. Okay, later, end of the year. Remaining 50 will go under the workings. Workings, other expense working. Under other expense working, you have to record a 50 expense, which is the revaluation loss. So this is how you have to do when there is a prior revaluation gains and subsequent revaluation losses. So I would say doing this question itself for like 2 or 3 times will give you the perfect understanding of the revaluation. You do it and see, will you? Trust me and do it and see. Same question, you do it another 2 more times and see. Now let's get into the last situation. Prior loss. That means last year accountant, he has already recorded loss. Okay, we'll assume. Now you are doing it. When you are doing it, what has happened? Asset value has increased. Always check that from carrying value. When you compare the revalued amount, what has happened to the asset? Check that. Simple case. Record it first. After that, record the remaining entries. That's what I'm doing. From the beginning, from the first question itself, that's what I'm doing. I'm seeing whether the asset value has increased, whether the asset value has decreased compared with the carrying value. If it is the land, obviously it should be cost over the prior revalued amount. So you see whether it has increased or decreased. Increase means increase, decrease means decrease. That's all. So here it has decreased by 170. So it has increased by 170. So debit the relevant asset 170. How to credit it? So in the general way, now you think in the general way, where to credit? To the OCI. Now here you can't credit to the OCI. Why? I told you, always you have to check the prior things. Prior 50 was there, loss of 50 was there. Then what you have to do? Reverse that loss. Reverse that loss. Credit. Reversal of revaluation loss. Reversal of expense. It's a reversal of expense. That's why credit. Reduction of expense. Reversal of expense. Reversal of expense. So reversal of expense. How much is that? 50. So remaining 120 only will go to the other comprehensive income. So he will go and give to the Mr. Revaluation Reserve. So when you look at this in your PP note, you have to show a plus 170. In your SOPL OCI, under the OCI, you have to show a 120. So he will go and give it to the Mr. Revaluation Reserve inside the SOCI, statement of changes in equity end of the year. He will go and give. Okay. So this 50 will go to the other expense working as a reversal of expense, reduction of expense 50. This is how you have to record. So as I told you, try this question and see. This question also another two or three times try and see. You will be perfectly okay with the revaluation adjustment. Okay. If you have any further areas to be clear, do not hesitate. Just drop a message or not a message. Just drop a comment or message or whatever. Okay. That's it. Bye-bye.